In our previous video, we looked at the top 10 most popular expenses that landlords could claim to avoid UK tax legally. In this video, we will look at one of those deductions in more detail, being the replacement of domestic items. If you let a furnished property, it is very likely that you will need to replace domestic items from time to time. A specific relief provides tax relief for the cost of replacing certain domestic items. The relief does not extend to the initial purchase of the items. The relief is available to both unincorporated landlords and corporate landlords. However, be aware that the relief does not apply where the property is a furnished holiday letting or where rent-a-room receipts have been received. So what are domestic items? Domestic items are items for domestic use such as movable furniture, furnishings, household appliances and kitchenware. Availability of the relief is contingent on the following 4 conditions being met. Before we go into detail of the conditions that need to be met, we should warn you that you should stay until the end of the video when tell you how to calculate the relief. So back to the 4 conditions that need to be met before you can claim this relief. Condition 1. The individual or company must carry on a property business that includes the letting of one or more dwelling house. Condition 2. An old domestic item has been provided for use in the property and it is replaced with a new domestic item. The new item must be available for the exclusive use of the lessee, and the old item must no longer be available for their use. Condition 3. The new item must be used wholly and exclusively for the purposes of the business, such that a deduction for the cost of that item in computing taxable profits of the rental business would not be prohibited under the wholly and exclusively rule, but a deduction would be denied on the basis that the expenditure is capital expenditure. Condition 4. Capital allowances have not been claimed in respect of the expenditure on the new item. If your purchase has met the conditions, how do you get tax relief on this purchase? Well, tax relief is given as a deduction in calculating taxable profits for the cost of the new item on a like-for-like basis. If the new item is superior to the old item, there is no relief for the cost of the improvement element. Therefore, the deduction is equal to the lower of the cost of the new item and the cost that would have been incurred had the old item been replaced with an equivalent replacement. Before we give an example of how to calculate the deduction, please stay to the end of the video where we answer the question of what happens to any proceeds from the sale of the old item. Now, back to our example of how the deduction is calculated. Andrew lets a furnished flat. He replaces an old washing machine, which cost £150, with a new washer-dryer that cost £325. An equivalent washing machine would cost £200. As the washer-dryer is an improvement over the old washing machine, the full cost cannot be deducted. Instead, the deduction is capped at £200, which is the cost of a new washing machine equivalent to the model being replaced. You should also be aware that a deduction is also allowed for incidental capital expenditure, such as delivery and installation costs and the cost of disposing of the old item. So what happens if the old item is sold? If the old item is sold, the amount of the deduction is reduced by the proceeds received from the sale of that item. Going back to our example, had Andrew received £30 from the sale of the old washing machine, the deduction would be reduced by £30 to £170. If the old item is part exchanged for the new item, the deduction is the amount paid on top of the part exchange value. If you have questions about replacement domestic items or any other tax matters, then please comment below.